Here we're going to talk about the Form 940. This is the form that we do for FUTA. And it is an annual form. We do this form once a year. When we talked about FUTA, we talked about how we had to calculate it every quarter and possibly pay a deposit if we owed more than $500. We had to pay that in a deposit quarterly. And generally it's better, even if you owed less than $500, to just go ahead and make those deposits quarterly of what you owe. The filing of the actual form, however, is done only once per year. It is due by the end of January. And so of the following year. Alright, so let's take a look at this. We have up here the employer ID number, and you would be plugging that in. Once again, if you're already signed up as an employer with the IRS, they would have this already available with your name and address, etc. already on it. Okay? But if you were using a blank form, you would put the employer ID number in. If this trade name business is, if you're Jane Doe and you have a business called ABC Company, this name means Jane Doe, not the ABC Company, not the name of the company. Then the trade name would be the name of the company. Okay, now if it's an incorporated company, then it would be the name of the company up here under name. Okay, that's just if you're a sole proprietor, then the sole proprietor's name would go under name and the company name would go under trade name. Then you've got the company's address and foreign information if it's foreign. Over to the right you have some boxes to put in. If this is an amended return, meaning you already filed a 940, submitted it, and then found that there was an error of some kind and you needed a fixed one, that is an amended return, and you would check that box. Successor employer means that this company had employees, was going along, and then the company got sold to somebody else, but the somebody else is still running the company like it was with the same employees, and so that's a successor employer who just stepped in the shoes, is continuing to pay the employees as they were already being paid. Letter C is no payments to employees in 2014. So if the whole year went by and you didn't pay any, maybe you did in 2013, and that's why you have a pre-printed name form. But if you plan on never having employees again, you need to let the IRS know that. You need to tell them that you're all done and do a final thing, which is letter D, final. Business closed or stop paying wages on a more or less permanent basis. Then you would check D. And then they would know not to send you these forms. Until you let them know that there's a final one, you need to keep filing this form even if there are no payments. And so you would, if you think you're going to have employees in 2015, you would check the box on C, and that would just show that there's no payments. You'd put a couple zeros on this form and go on. Okay. They tell us to leave any lines blank if it doesn't apply to us. 1A and 1B deal with what states that you have SUTA do. If you only have one location, employees in one state, and you're only paying one state SUTA, then you would use line 1A and you would put the letters for that state. So if you were only in South Carolina, you would put an S and a C up there in line 1A for South Carolina. If your company is such that there's multiple different states that you have to pay unemployment taxes to, then you would put a check mark in line 1B. You would have to go to Schedule A of Form 940, and that has a bunch of boxes for all the different states, and you would check off all the boxes of all the states that apply. Line 2, if you paid wages in a state that is subject to credit reduction. Currently, South Carolina is not subject to credit reduction, so you would leave that blank. And I don't think you need to do that for Pennsylvania for your project either. I believe Pennsylvania, your project is just one state, which is Pennsylvania. So you would have PA up in line 1A. Part 2, determine your FUTA tax before adjustments. Okay, line 3, total payments to all employees. So this is your this is your gross wages. Goes in line 3. Line 4, payments exempt from FUTA tax. And there's different ones that might apply. Fringe benefits, group term life insurance, retirement pension, dependent care, and other. So for your project, this would include anything that came out for the retirement, the IRA simple account, I think it was, or a SEP or a 401k. Any of those are retirement/pension that might have come out of, been withheld from the employee's checks, and put into one of those kind of retirement accounts. And you do not have to pay FUTA tax on those amounts. And so you would check box 4C and put the total amount that came out for simple in line 4. There's various other reasons you may have things that come out of the employees' checks that don't have to have FUTA on them. Line 5, total of payments made to each employee in excess of $7,000. So here's where you have to see on each employee how much total wages do they have that's above the $7,000. And so you would take, if you have an employee that made $27,000 worth of gross wages for the year, you would subtract out the $7,000, that's their first $7,000 that's taxable, and so they have excess wages of $20,000, and that would go in line 5 if you only had that one employee. Now let's say that employee had gross wages of $28,000, and they had $1,000 taken out for 401k. The $28,000 would go on line 3. The $1,000 that was taken out for 401k would go on line 4, and you would check box 4C. And then that leaves you with 28 minus 1 is 27. And so that is, again, 20,000 in excess of the original 7. So 20,000 would go in box 5. Line 6, the subtotal, which is line 4 plus line 5. So in our example, there'd be 1,000 in line 4 and 20,000 in line 5. So that'd be 21,000. Line 7 is the total taxable FUTA wages, which it says is line 3 minus line 6. So that'd be 28,000 in line 3 minus 21,000 in line 6. And so that would give us $7,000 in line 7. So So $7,000 of this one employee's wages is actually taxable. Then you're going to multiply that times the rate that's on the 940 form. So we have 7,000 times 0.06, and so that would be 420. Okay. Determine your adjustments. If any line does not apply, leave it blank for part 3. This is where if you were late on your SUTA, then you would not get to pay 0.006 on your FUTA. You would have to pay much more than that. And so it involves a big calculation. If there's a credit reduction in your state, that involves a calculation. And so lines 9, 10, and 11 should not apply to you, because you are going to make sure that SUTA is always paid on time. And therefore you won't need to do line 9 or 10, and as long as you're not in a credit reduction state, then you won't need line 11 either. And of course on your project you will not need either of those 3 lines. Line 12 is line 8, 9, 10, and 11 all added together. So for you, line 12 is the same as line 8. Line 13, how much FUTA was deposited for the year? So this is where you look back and see, check all your deposits, see how much there was, and put that on line 13. Of course, if you would have calculated correctly each quarter, then your deposits should be the same as what you have on line 12. Now, it's possible that this 4th quarter, maybe for the first 3 quarters it totaled $400, but I owe $20 for this 4th quarter and I haven't deposited yet. Okay, and so you would just put the 400 there that you already deposited, and you would have balance due of $20, and you can make a check out for that $20 and send it with the form. It tells us over here to the left, if it's more than $500, you have to deposit it. You cannot send a check for more than $500 with this form. You would, if this turns out to be $620 that you owed, then you would just have to make the deposit through your normal depositing, online depositing situation. If it's less than $500, you can just pay a check and send it in with the form. Okay? Overpayment, if line 13 is more than 12. So if I had accidentally sent in too much deposit and I had sent in $500 deposit, I would have $80 of overpayment. And then I would have to say down here, do I want to apply that to my next quarter, or do I want the IRS to send me that $80 back? Okay, they'd probably get there about the same time, because the next quarter is going to be due April 30th, and it'd probably take the IRS about that long, maybe a little bit less. Alright, here's the second page. You would have your name and your employer ID up here at the top. Then you're going to go through each of these first quarters, and just like the 941, this is the liability for each quarter. What did you owe for each quarter? Not what you paid or what you deposited, but what you actually owed for each quarter. And so you would put how much you owed for each quarter, and you would total those up, okay, and it says total must equal line 12, okay, which is our total liability for the whole year. And this is just breaking that liability down to how much did we owe for each quarter. You have this next section. May we speak with your third-party designee, either yes or no. Put the information in there. The signature has to be done by the person who can go to jail if fraud is there, and you can print that person's name and title. Okay. Here's a paid preparer use. If there's a CPA or any other paid preparer that did this form for your company and you paid them, then that person's name goes there. If you work for the company, you're an employee of the company, and you're the bookkeeper and you did this form as part of your job for the company, then you're not a paid preparer and you're not going to fill this part out.